So in today's session, I get to discuss the concept of duality, or call it the dual concept. Now, the dual concept is part of the conceptual framework, and it simply states that every transaction is going to have a double effect. Now, when we say that every transaction has a double effect, this is demonstrated in the double entry system of accounting, which you're going to see later on in action in the video series or in the videos coming up. And also the dual aspect is what keeps the accounting equation balancing. Again, we are going to discuss the accounting equation and do numerous work examples in the videos that are coming later on. If I may illustrate it further, let's say I'm going to buy a car for my business. Okay, I'm buying a car for the business. So there are two items that are going to be affected by that transaction. When I buy a car, I have a fixed asset called a motor vehicle or a car in my business, and also at the same time, the amount of cash in the business has reduced. Yeah, so cash has reduced, an asset called cash has reduced, and we have a new asset in the business called a motor vehicle. So that is the dual aspect, and the dual aspect keeps the accounting equation always balancing, and it is also the idea behind the double entry system of accounting. Now, of course, the illustration that I've used for a car is a simplistic one. Sometimes you could be faced with more complicated scenarios that require, adjusting a few things here and there. But at the end of the day, the underlying principle is that the dual aspect is at play. So that's it regarding the duality concept.